Ladies and gentlemen, good evening. This is your market update. So we have disclaimers on updates. I'm just going to give you a brief story. So if you lost money this week, you obviously have company. I had Alpha and Perp, okay, as part of my portfolio, and I had those positions staked. Perp did okay, but Alpha disappeared roughly 70%. So if you're hurting out there, I feel in many ways just as bad as you do, not only for my own P&L, but for yours. So on that note, let's use the number 45 to stay alive and rise up here, because at the end of the day, you got to believe. Now, let's go to research and development. At Token Metrics, we have all types of research and development: AI, machine learning, and human. Human research and development has been focused on using time, which is very convenient because I'm sure everyone out there is asking, when, if ever, is this going to be over? So William Gann, technical analyst, I use his work. He made $50 million trading during the 1920s and 30s. Now for his work, he was a mathematician like Fibonacci. So he liked the number 45, he used 45-degree angles. He used ancient religion research to find the number 1335 that he used for cycle analysis, timing tops and bottoms. And he also liked multiples of 15, like 30 or 60. Okay? Now, let's talk about how we could use these numbers to help you. So a brief public announcement. It's not a coincidence that Gann called his memoirs 45 Years at Wall Street, and they could not resist throwing in a picture of a famous number 45. Okay, now this is a very busy Bitcoin chart. Try and focus your eyes up on the top part in the yellow. I'm using a 45-minute Bitcoin chart. That means each bar represents 45 minutes of trading. I do not believe it's a coincidence that coming up on May 25th, it will have been 1,335 bars from the all-time high at 64K. As a matter of fact, if I go to 62K and 51K and I draw it out to May 25th, okay, every high seems to be a multiple of 45. Now, if you didn't understand that, that's okay. Just remember that on May 25th, there is a lot of Gann evidence. It's like a full moon, all kinds of stuff happening, that this thing can turn around at that time. Or to be more neutral about it, that May 26th is some sort of big inflection point. Now, I think that's when sort of a bottom will be in and then the up move will start. If I'm wrong, then May 26th could be another leg down, a bear market curtains. However, using this 1335 from the top, my guess is that the bottom or the uptrend starts May 25th or 26th. Now, let me provide a simpler look at this. In November of 2013, Bitcoin went from 200 to 1,100. Okay, 90 months from that bottom, okay, is May of this year. In August of 2017, Bitcoin took off. 45 months from that bottom is May of 2021. What does this tell me? Well, possibly that the market could be making a bottom, much like it did in 2013 and much like it did in 2017. In other words, Gann used these numbers to try to find inflection points and see when history would repeat. I think the month of May will be famous for a bottom in crypto, not a top. Obviously, I'm a human being, and the market is the ultimate arbiter of the decision. Now, ETH, actually cleaner and simpler. I looked at the start of the Coinbase listing. Okay, May of 2021 is 60 months since the Coinbase listing. It's 30 months, June, next month, is 30 months since the 2018 low at 80. What is this telling me? Well, that we're coming into a period where we're making a major low or major inflection point in Ethereum. In other words, at this big moment in time with Ethereum at 2K, buy it or sell it. Based on this research, not investment advice, buy it, right? Because 2 times previously, it's been a bottom on these big Gann numbers. Now, let's say that was too much for you. I have a Gann setup. It's similar to what Forrest does. And I have this trend line for Ethereum, right? And Ethereum got way overextended right to a Gann resistance point at 4,300. My idea was to be cute and move from ETH into smaller altcoins instead of just going sell in May and go away like I have been for the last 6 months. I wavered. So if you've made a mistake, I made a mistake, even though I had the right idea. Now, how do I fix my mistake? Well, it looks like ETH is now back way overextended below its trend line near support around 2,000. So again, you've been paid in the past to get long ETH when it gets stretched out below the trend line. Now, if ETH came back to the trend line, it might hit, say, 3,600 by the end of June and eventually wind up at 6K at the end of the year. So I'm not giving up on Ethereum. You know, my boss is on CNBC telling people the way it is, and this chart backs it up. So if you look at the cycle work and the basic work in Bitcoin and Ethereum, this idea of the death of crypto, that it's all over, let's just say I vehemently disagree. Now, the market could turn around and wipe me out, but I've got Gann numbers behind me, okay? I've got price and time work to back up what I'm saying. Now, let's take a look at Bitcoin dominance. So obviously, there's been a huge altcoin party. It's kind of a stealth altcoin party, right? Like ETH went up, but what you also had was the massive surge in market cap in things like Cardano and Doge, right? And that just annihilated Bitcoin dominance, right? Bitcoin dominance went on a line from 53 to like 39. Well, if I do the fib retracement work, even though this is obviously a calamity for everyone's P&L, because shockingly, what they decided to mark down was the DeFi coins that I think are priceless over the next 6, 12, and 72 months. Bitcoin dominance is just like, it's done a 23% retracement, right? So I know it looks like, oh God, it's Bitcoin and everything else is trash, but really it was just a retracement in the dominance chart because nothing goes straight in one direction. Now, let's just take a look at altcoins, right? I can't look at every altcoin for the presentation, but let me just see if I can come up with something that restores not only my faith, but your faith in this idea that what we've just witnessed is something akin to the 1987 crash. The 1987 crash came after 5 consecutive up years in stocks. It was a 25% down move in one day. And basically, I think the overall correction was well over 30%. The market went down and it stayed down into Christmas, creating despair. I was 18 years old at the time, and it was tough to watch my father as a broker go through it. The only thing good for us, maybe, is that that whole process that took 3 months may have taken 7 days. Nowhere is this more evident in the coin that I got hosed in, Alpha. Okay? Multi-Coin Capital and Delphi Digital like this coin. They invested in it. It went from nothing to $2 and something or $3. It traded in a range, and then it fell out of bed from 220 to 50 cents. It hit horizontal support, and I also noticed that May 23rd is exactly 225 days from the start of trading in Alpha. Correct me if I'm wrong, but 45 times 45 is 225. And the reason I brought up 87 was because that when 87 was over, you had a generational low in stocks. Now, is this a generational low in alpha? I don't know. I certainly hope so. I think this coin has a lot to offer, not investment advice. That said, when I look at this, I go, do I want to buy or sell DeFi? Like, has anything changed with DeFi except price? No. Matter of fact, everything in DeFi is now on sale to the point where institutions who have missed it multiple times can now just indiscriminately vacuum up the coins. Okay, especially since they did the panic move on a weekend, most likely when retail was panicking. So if you were wondering what the heck was going on this weekend, people were probably pushing it down to trigger stops and despair so they could vacuum it all up. Okay, perp. This is a derivatives exchange. It's part of what I call the future of Wall Street trade. Perp has done relatively well, knock on wood. Okay, I've noticed that from the bottom in perp where it started to move at $1.28 out until tomorrow, that's 135 days. So with perp well off its highs from 15 back down at 7.5, it's like buy or sell perp. Well, I'll leave that up to you. Again, the major narrative is DeFi 2.0. The major narrative is Wall Street coming to DeFi. Now, it didn't occur to me that Wall Street might not like that somebody might want to push this market, right? Musk started it, and it gave everyone an excuse to lean on the system and to shake your faith in crypto, in DeFi, and on the future of finance on blockchain. But again, other than price, what has changed? Okay, I'm not changing my mind about this. Now, I may get hosed. If you listen to me, even though it's not investment advice, you may get hosed. But I'm not changing my mind about DeFi and the future of Wall Street on the blockchain. Okay, let's talk about Synthetix. I did some work that had Synthetix possibly going up to 100, at which point it went from 24 to 10 and made me look like an imbecile. Few things of note in Synthetix. First of all, the avalanche lower occurred in a parallel channel, a perfect two-wave. 1987 was the perfect two-wave in equities. Because again, what does a two-wave do? It leads to a three-wave, which gives you a lot of slow, steady upside gratification. Initially, everyone's like a little careful. And then later on, it accelerates and accelerates. But it starts off kind of cautious. Now, again, in Synthetix, all this gymnastics between 28 and 10 has been done in a parallel channel. I find that interesting. I also find it interesting that May 25th to 28th is 270 bars, daily bars, from the DeFi high in September of 2020. And it's 180 bars from the low in November of 2020. In other words, Synthetix, like a lot of these other coins, seems to match up right at a key inflection point. Oh, and by the way, a formerly complex process of staking SNX can now be done on Yearn Finance. Yes, I know it is all going to hell in a handbasket in terms of price, but there are positive DeFi catalysts elsewhere. So as you look at the SNX chart, let me give you the bottom line. History, recent history, has been fraught with ideas that, oh my God, something volatile happened. Like, you know, the Gulf War, Iraq invaded Kuwait, oil doubled, and everyone thought that everything was going to go down forever. Stocks went up all throughout the 90s. A giant hedge fund, long-term capital management, fell apart in 1998. He almost took the whole system down. John Merriweather was the head of the fund. The Fed had to cut rates 3 times, and that's all everyone talked about. Meanwhile, Dell Computer and Microsoft were starting the Windows and PC revolution. Okay. In 2002, everyone was sick of dot-com stocks and everyone ignored the Google IPO, which I believe was in 2004. In 2010 and 2011, all anybody wanted to talk about was Portugal, Italy, Greece, and Spain going out of business, starting another version of 2008. Meanwhile, while they were looking over here, well, the real gigantic life-changing money was in the FANG stocks: Facebook, Amazon, Netflix, and Google. Can you really look at this chart of Synthetix? Can you really think about what Ian Bellina said on CNBC and look yourself in the mirror and go, yeah, it's over for DeFi? Just because sushi went to 6. Just because for whatever reason, whoever did it, for whatever reason, everybody got liquidated all at once. And you got crushed and you feel horrible. But should you buy or sell when you feel horrible? My concluding note is, on this stream, I'm sort of famous for saying when you have a lampshade on your head, sell. When you feel like dancing with a lampshade on your head, sell. Now, we have not had the opportunity to say that when you put down the lampshade and pick up a bucket and you don't feel good, the worse you feel, the more you should buy. Because frequently, your body is tuning into the distress around you, but your mind, your charts, your token metrics research, and your crypto family maybe can help you realize that, from great pain comes opportunity. And that's the market update.
All right. Thank you, Bill. So if you enjoyed that market update, be sure to smash the like button, subscribe, put on alerts, and share this video with the crypto family. Right now is a very huge moment of truth. So we're actually going to do a double market update. So let's segue to Forrest, who'll also share his insights on Bitcoin. Forrest?
Yeah, guys. So here's my screen if you guys can see it. And this is essentially my game plan, more or less, for Bitcoin, right? And I first want to zoom all the way out and take a look at Bitcoin's crash or bear market after the 2017 peak, right? What happened? We got a lower low that came in. Well, first we got a lower low, kind of got a head and shoulders pattern. We came back up and tested and got a lower low, got rejected, then saw a 70% correction from the all-time high. 70%. And this was over the course of December, January, and February, just about 2 months here to drop 70%. But then guess what happened? No bear market is confirmed until we get a retest, right? Bitcoin got a retest. It tested $11,500, $12,000 twice. The second time it ran into this resistance and got rejected, and the bear market was on. Now, we go to where we're at today, and everybody's question is, are we in a bear market? Is the bear market here? The answer is, we don't know yet. I personally don't think it is a bear market. I think we're actually probably going to recover based on the fact that a lot of this downwards bearish momentum is from manipulation and FUD. That's my personal opinion. Do with that information as you will, not financial advice. However, the way that I'm trading this is preparing for two different scenarios. It's preparing for a bear market scenario as well as launching back up potentially into a bull market, right? And how I'm hedging my portfolio is I strongly believe that whether it's a week from now, whether it's on May 26th, whether we shoot right back up or we take 2 months to come back and retest, right? We've got a resistance trend line here, and I'm going to turn this pink just so you know what I'm talking about. This pink line, dotted line. We've got this resistance trend line that we could need to come up and retest, and we've also got this head and shoulders neckline that could also act as potential resistance, right? And for good measure, we've also got the resistance line here that I think could end up being a second line of resistance later on. However, we don't know if we're in a bear market yet until we get this bounce and this rebound and this retest. I strongly believe that we're going to get a retest, whether it's up here at 52K or it takes us 2 months to get there in August and it's up at 46K. At which point, again, this is not financial advice. This is what I will be doing. I will be selling this retest with a certain portion of my portfolio. Undecided at this point, depends on market sentiment and what the narrative is, and if there's a lot of good news or bad news in the market. I will be selling this retest. Why would I be selling this? And of course, not with my entire portfolio. I'm very bullish long-term on crypto. I'm planning on holding a lot of crypto no matter what. But I do want to free up some capital potentially if we do go into a bear market and I can start accumulating crypto lower. Why do I feel comfortable selling here on this retest? Because if we break through and I'm wrong, and we don't go back down lower, we break right through and look like we're going to go right back into a bull market, chances are we will get another confirmation test on this same exact trend line. We have to break through it. We have to test it, break through it, and then confirm on top of it. If I sell here and I'm wrong and we go up higher, I can buy back in at the exact same price, maybe even a little bit lower off of this confirmation bounce, right? Now, if I sell here and free up capital and we get rejected and go into a bull market or a bear market, and or maybe an accumulation phase, now I've freed up a large amount of capital up here that I can accumulate crypto long-term with and add to my crypto balances. Because at the end of the day, I'm not trying to increase my US dollar balances in a bear market. I'm trying to increase my crypto balances. I'm trying to increase the amount of Ethereum I have. I'm trying to increase the amount of Polkadot I have, trying to increase the amount of alpha I have, right? So that in the next bull market, my gains are exponentially higher, right? So just to recap, we don't know whether or not we're in a bear market until we get a confirmation where we retest and we get a confirmation either downwards and a rejection downwards, or we pass the test and get a confirmation bounce off the top, and then we essentially have permission to retest all-time highs and go higher. So that's how I am planning on managing this next few months or these next few weeks. We don't know how fast this could act, and of course, maybe it doesn't do this at all. But I would be very shocked if we don't get at least some sort of a retest, because historically, we always do. Maybe we go down to 25K first, and then we get a retest at 40, 45K. I don't know what the numbers will be. I don't know how long it's going to take. But this is my personal plan for managing these next couple weeks, this next month or two. And that wraps it up.
All right. Thank you, Forrest. If you enjoyed that as well, smash the like button, subscribe.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.